Hi, it's Kevin May in the PhocusWire studio, joined again a year on from last time. Thanks for joining us, Mark Okerstrom, the CEO at Expedia Group.
Yes.
So, nice to see.
Good
big topic of conversation the last couple of weeks, triggered mostly by a succession of you on your respective earnings calls, starting to talk about the impact on your SEO, whether it's in inverted commas headwinds or some companies are seeing it differently. Just give us initially your perspective on why that's now become the subject of conversation, because that change in the Google real estate has not happened overnight. It's like a jigsaw piece. It's been going on for almost a decade.
Yeah. Well, it's been something that's going on for over a decade, and we have had a strategy to increase the diversification of our channels, and we have hugely diversified sets of channels. Building much more direct business over time and enhancing our ability to bid in paid channels. We've been happy with the return on ad spend. But that said, listen, when certain product changes get made, it can have a ripple impact on the business, and that's what we saw in the quarter. But listen, we're completely optimistic. We can continue to build on our strengths in our direct channels. We've got an incredible portfolio of brands with real loyal customers, and our direct traffic growth seems very strong. So we're optimistic that we're going to continue to build great products and customer relationships over time.
So, I mean, some very smart advertising people that have been kicking around here are saying, it is, you would love to find a new channel that is as efficient, that you're able to spend $6 billion a year on it, or there or thereabouts. That new channel is almost like this kind of utopian thing on the horizon. It doesn't exist at the moment.
Well, I think there continues to be, a broad array of marketing channels. Whether it's social, whether it is digital video, whether it's traditional linear television, particularly around live events, which continues to thrive. But listen, I think there is certainly a piece of there is some free traffic that was coming that is no longer coming, and I think that's where you've got to continue to make sure that you build great products, so you build direct customer loyalty, and direct customer loyalty, delivers profitable businesses.
Right. I can take you back to 2010 now. And after the ITA software acquisition, there were quite a number of you who were fairly incensed about that. And the Fair Search kind of lobbying group and organization was created. There was yourselves, there was Microsoft, Trip were involved as well. It still exists as an entity, at least it's still got a website. But do you sense that perhaps because there are a group of you that are perhaps seeing these headwinds, that kind of organization or even the same organization could kind of refuel its pumps a little bit?
I don't know. I think I don't want to get into the speculation of what's going to happen. I think that obviously Google is a great partner of ours as well, and so I think there's room for regulatory scrutiny of a lot of these big platforms, but certainly I don't want to get into the business of speculating what we will do on that or not.
Okay, maybe next year when we reconvene. Okay, so interesting development, not to do with Expedia, but just in the market, and I think it'd be interesting to get your perspective, Mark. A couple of weeks ago, Skyscanner, which is huge, now owned by Trip.com Group, as we now need to call it, metasearch engine, has created this hybrid model. So you have pure play meta, you have facilitated booking, and now it's becoming the merchant of record. So there's three strands to it. You don't own a flight metasearch engine, but you have a huge interest in Trivago. Just give us your perspective on that change for them and what that potentially means for the metasearch, the players that are in the industry.
Well, I think it's an interesting development. I think that type of model has been launched in some form in China and other parts of the world. So we'll see if it ultimately resonates with customers. I think, listen, the great thing about Trivago is dead set on hotel and lodging, and they continue to innovate on their lodging search and continue to add alternative accommodations. And of course, they are the place where you can see everything, and they've got their own product and have been testing over the years with their own product to enable actual facilitating booking, on top of it, and in some cases, making it look like it is booking actually on Trivago. So it's an area where they have been innovating as well. but again, it's not, it's hotels, so it's not directly competitive with what Skyscanner's doing on the air side of things.
Okay, let's move on. You mentioned China just then.
Yeah.
I mean, that entire region is kind of witnessing the rise of the super apps.
Yeah.
Some would argue that Google is becoming a super app because there's so much that it does, and we've discussed that already. Where do you think the super app may emerge in the Western Hemisphere? That affects your markets.
Yeah.
Or is it an Amazon, or is it something else, or is it the Google again?
Yeah, I think it's a real question. I think my opinion anyway is that the super app in Asia has largely developed due to the requirement for payments and lack of credit card penetration. You name it. Why lack of banking infrastructure. Ultimately, you've developed essentially a payments hub, and when you've got a payments hub, you can start to build things on on top of that. I think there's been less of that problem to solve, and there is less of that problem to solve in Western Europe and North America. So I think there's a question of whether or not there is a need for that type of that type of app. That said, though, I think if you take travel out of the picture, Amazon is certainly becoming a place where you can get a lot of things and becoming more of a super app. I think obviously Google is doing their thing around all categories, mostly in the way of more of an advertising model, and I think they're probably both doing a pretty good job at it. And so if there is a super app to be had, I think both of those players are positioned pretty well to do it.
But does it make you nervous that one of them would do it even to a greater degree than they are? Google, in the context of it just being a bigger or super app, or Amazon just doing the travel thing that it started doing in India.
You've got to be mindful of it, and that I think it goes back to why you have to be able to build great brands in this industry and build great customer relationships. And Expedia, Hotels.com, these are great brands. They have great customer relationships. They offer great products and great loyalty programs, and I think ultimately those become moats to some degree against those types of those apps, and that's what we were focused on.
Okay, let's move a little bit. Again, a non-Expedia question.
Yeah.
Cara Swisher, who was on stage here yesterday, I'm going to paraphrase what she said. She was essentially saying there's a lot of investment money swilling around that's essentially going to bad ideas, and that's a dangerous thing for the tech industry generally, but I think hinting at that it's travel as well. I mean, just give us your kind of reaction to that, and do you agree, and two, what can be done about that? Does the VCs need to be kind of reined in a little bit, would you say?
Well, I think there's no doubt that the cost of capital has been significantly lower, and there's been a lot of capital in the markets in tech in general across the board, and I think that has impacted lots of industries, and the willingness of companies to lose a lot of money for a long time, I think does create obviously very interesting, in some cases challenging dynamics. So I think if the question is, has that had impact? Yeah, absolutely, it's had an impact. I think over time it needs to work itself out.
Yeah, how does it work itself out?
Well, I think ultimately you will see industries, get more rational over time, and you will get to a spot where companies are really held to deliver profits. And when companies are held to deliver profits, I think you'll get to a different, more rational state of competition. Okay,
and lastly, we spoke 2 years ago as well. I think you were 8 or 9 weeks into the job or something like that. But I asked you, I think I did your first 100 days question, and one of the things that you referenced, that you said is not just a 100-day task, it's a really ongoing thing, and it was about diversity in the company.
Yes.
So now that we are 710 days on from that conversation, how fast forward have you taken that project within the Expedia group?
Yeah. Listen, I think we've still got room to go. We've got a number of initiatives that we've put in place, around diversity, but also around inclusion. Specifically, we've got business resource groups that are set up. We've been doing allyship training across the organization. So we've made some okay progress, but we recently signed the CEO pledge as more of a declaration to ourselves and the world that we do need to do better. We're committed to doing better. We do have diversity and inclusion teams that are established now to make sure that we continue to make better progress.
Right.
But like I said, we have made some decent progress in a number of areas.
Okay, great. Mark Okerstrom,
Yeah.
thanks again. Thank you.
Thank you.